All right, we've got Aaron on the line from Fagan Associates, and Aaron, you know what? I want to score big right now with some tech stocks. I hear they're on fire. I don't want to lose a dime. Can you set me up?
Yeah, and I think that's why we've been kind of getting some calls lately. Is most of the calls that we get with people with their own kind of input on the stock market, tends to be things that are doing well. And in the past 5 years, technology has done really well. So most of the calls we get are centered around technology. So, we kind of try and tell people, hey, don't kind of have all your eggs in one basket, especially on, really, risky stocks like that.
Well, yeah, I know what was it, in the early 2000s, or was it earlier than that, everybody had all their tech stuff and then it just kind of fell apart?
Yeah, we had the dot-com boom. The market was up, I think, 40% a couple years in a row. Then all of a sudden, it just got killed. And, it took a lot of these companies, 15 years to get back to the prices they were in 2001, even like a Microsoft or an Intel, some really great companies. So, basically, you just kind of tell people, not to have all their eggs in one basket and make sure, their portfolio is diversified. And, if you're getting towards retirement age, make sure you're not too much in the stock market either, where if the market pulls back, you're in big trouble.
So when it comes to your investments, be a little more boring, is what you're telling me.
Yeah, mix in some boring. It's like a barbell approach. Mix in some boring stocks with some stocks that you think are pretty innovative and will take us into the future. And that's kind of what we always do, and that's what we tell people to do.
So what about like foreign stocks? Should people be invested in that a little bit?
Yeah, we invest in foreign stocks. We usually use ETFs, which are a combined pool of assets. We have a couple, SCHE, which is Schwab's emerging market, so you have access to Asia, which is a pretty fast-growing economy. And you have there's other sector-specific ETFs like VNQI is a Vanguard real estate ETF that we own. That's European. So yeah, we do think that it is good to be invested foreign, but we still have most of our money in the United States, as we think it's the most transparent economy in the world.
We're talking to Aaron at Fagan Associates. Let's say you're 40 years old and you got your 401k. What should your diversification kind of look like?
Yeah, 40 years old, and you have another 20 years to retire. I think the majority of your money should be in the stock market. It should be in the stock market. 90 to 100% of it should be in the market because you can afford, the ups and downs of the market. And if the S&P does 10% historically, you can just you put it in some great funds that maybe your deferred comp has to offer that track indices like the S&P. Or maybe some technology and get some diversity in there, and but just make sure it's in the stock market so you can participate, especially if you have 20 years to go.
Okay. Well, if people have questions about their particular portfolio and their 401k, how do they get in touch with you, Aaron?
Yeah, you can call us at 518-279-1044. You can email me at aaron.fagan@faganassociates.com, or you can email us at investment@faganassociates.com.
Perfect. Well, as always, we appreciate your insight here because, you see everybody, making big wins, and it's like, I want to get a piece of that. And
yeah, and then, and then the past couple of days, the market, the technology sector was down 2% yesterday, and it looks like another couple percent today. So, people, you just got to make sure you don't have all your eggs in one basket, as we've been saying.
All right, sounds good. Hey, have a great week. We'll talk to you again next week.
All right, talk to you next week. Thanks, Randy.
All right, bye.